Sorry to interrupt.
So here we are right now on the lows. We got to $6.30. This is a $620 call that expires today. And today is expiration. Google's high was 641.73. We just hit 625. We bounced. The high of the contract was $22. And the public had to go ahead and ride them down to $6.30. What a bloodbath for the bull. $18 was the previous day's close. What a bloodbath for the bull. Then now they're at a wholesale tradable late day range. 8:28 a.m. Pacific Standard Time, 121, 2011 expiration with a 6.3 ratio low. Slide the bid to the wholesale. Out at the retail. Market maker entry. That's what it's about. That is the 1/22/2011 620 call. The public, during an options expiration, they had a big gain. Did they sell it? No, they never do. They never do. It takes a lot of skill to be on the other side of that public model. And that's what an SMF MMT does. So when these were falling down in value, they made a wholesale entry and a retail exit back to the public for a profit. And that's also going to be based on the actual dollar price action movement in the equity. So when Google is performing well, such as it is right here, there's your bottom, there's your super gap, there's your bottom in your brain. And the thing about it is that there's your lows have been put in. So the options had put in their low right down here in your equity brain, which was half of this bar. And that was 626.09 back to the upside, because that's that big bar that occurred the other day before you had the earnings gap. And a teeny is 67 pennies. We were up 22.81 teenies, which was $14.96. And now we are sliding the bid. Therefore, the option prices had made their intraday lows, entries, and exits on the bounce of the 620 call. Just as the 630 call had did about 45 minutes ago, it had made its big move, and we have a live trading video on the 630 call. Okay? And this is where we got made here. And look at the premium, down $10.57 on options expiration. If you're not an SMF MMT option market maker, I don't recommend that you get in there, because they can do various things like this on options expiration week. We trade them. We trade them right down to the closing bell. It doesn't matter. What does matter is that wholesale entry and that retail exit to the public. That's what matters, because that's what you're doing. And that is the glory of this platform. And that is the glory of the price action in the options market maker pit. And the thing about it is, that's what you do. And you already know where the prices are going to be before they get there. Then you know how to buy them, and you know how to offer them back out. And learning the control execution MMTs, new ones, not hard to do. Both of these expire today. 620 call, 630 call on Google. Today is 8:31 a.m. Pacific Standard Time. We will look at these later, going into the last hour or before, on or before the last hour, and we'll see where the pricing control mechanisms work. Eventually, during the expiration, they're going to get that wholesale bid. You'll never see the low again on the 620, because we're $7 above it, so that puts it $7 in the money above the strike price.